And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And good morning. Welcome to the show. Of course, it is Wednesday, the Hump Day edition of The Real Investment Show. And apparently, you need to trust groundhogs more than armadillos. So, cold blast coming through Houston area this morning, kind of high 30s this morning. Supposed to be down below 30 tonight. So apparently, Duxbury Phil was right. 6 more weeks of winter. Our stupid Bob the Armadillo said, no more cold weather, it's all fine. Anyway, little cold blast to kind of round out the winter season. But that's okay because next month is spring. And then it becomes a furnace. So it won't be much longer. You'll be begging for cold weather again. And it gets, cause that's such a story of my wife. She was complaining about how Christmas was all warm and stuff. She's like, we're not getting any cold weather. I go, just be patient, right? Just be patient. We're gonna have some cold weather. We have that cold blast in January. She's like, okay, I'm done. So,
man, I miss August.
No, I don't know about that.
I do.
I don't know about August in Texas. Maybe June. Anyway, so a couple of things going on, of course. Economically, not a lot happening right now. The New York Fed Manufacturing Index survey was out a little bit of improvement yesterday, but really not a lot of just economic data this week. Earnings are pretty much wrapping up, but next week we do have Nvidia. Of course, that's the last of the Mag 7 to report, so kind of all eyes kind of focusing on that. Nvidia's been having a nice little rally here following the DeepSeek announcement. In fact, it's now recovered most of that gap, well, actually recovered all of that gap down on that DeepSeek announcement and starting to kind of approach back to all-time highs with the markets. But, again, this is just, kind of the focus of the markets right now. And again, as we've kind of talked about recently, it's really not a lot to undermine kind of the thesis of the overall market, at least at this juncture, right? So we despite announcements of tariffs or DeepSeek or whatever it is, markets are taking these announcements pretty much in stride, working through what the potential outcomes of that are going to be, and then kind of suggesting that, well, maybe it's not that big of a risk as we thought initially. So we're starting to see, the markets are still just kind of hanging in here, not doing a whole lot. And again, not a lot of big drivers right now. Fed's on hold at the moment. Liquidity flows are okay. Money flows into the markets, as we've been talking about recently, have just been absolutely phenomenal. Where the money's coming from is very interesting, but there's just a lot of money flows going into the market. That's helping keeping markets elevated at this point. So again, not a lot to worry about. There's a lot of concerns. I was driving to work this morning, heard a commercial about, Lear Capital. They're a big gold company. Selling gold is like, oh, the economy's in a shambles, the government's a wreck, you need to buy gold. There's really no evidence of that right now. We can certainly make up a lot of kind of headline stories, but there's not a lot of evidence that things are on the brink of disaster by any stretch of the imagination. Economic growth is good. Inflation's coming back down towards long-term trends. Yes, it's kind of bumpy. Yes, it's bouncing around a little bit. But, those trends are still in place. There's no real indication outside of just improving economic growth that, things are on the cusp of, kind of destruction. Now, having said that, there's certainly reasons for concern. As we talked about yesterday, margin debt's getting very elevated here. Valuations are elevated. In fact, we haven't had valuations this high since really kind of the dot-com crisis. We're kind of getting back to those levels of real overvaluation. So certainly reasons for concern longer term, but in the short term, no real hint of disaster, at least not yet, right? It's just we don't have anything out there. And again, as we've talked about before, the thing that causes a big market reversion is some type of unexpected exogenous event that all of a sudden causes a repricing of expectations. And again, if you take a look at earnings expectations going out into 2026 now, S&P just recently put those out. I've got an article coming up showing you the data. But estimates for 2026 are $289 a share. That's just boomer economic growth. We're currently around 200 and $200 at this moment, or $204 as of last quarter. So you're talking about $85 worth of earnings growth over the next 2 years coming out of the market. That's very, very optimistic, even given the current rate of economic growth. That's well above the growth rate of the economy that can generate those earnings over the next 2 years. But again, we come back to the focus on the big driver, buybacks. Buybacks are expected to exceed $1 trillion this year. So again, lots of money coming into the markets. But here's what you need to know before the bell this morning. Yesterday, markets were really sloppy all day. We had talked about previously, Meta was on this historic run. Yesterday morning, right at the opening of the market, we reduced our position in Meta just because it's just had this huge, 20-day run. And of course, Meta came out of the gate, it was doing okay, and then through the end of the day, it kind of really just sold off. It was down about 3% yesterday. But the whole market was just really sloppy yesterday. Didn't do a whole lot, just really kind of flopped back and forth, not really going anywhere, wrestling with, kind of this, resistance at all-time highs. And in the last 15 minutes, out of nowhere, buyers came rushing into the markets and pushed the markets up to an all-time high. So we now have officially broken out of this consolidation range that goes all the way back to early December. So we've now broken out of these previous highs, broken out of the December highs. Now again, we need to hold that. So we'll have to see this morning if the markets can continue to build on that breakout and confirm that this breakout in place. But this move above to all-time highs, a couple of good things about this. One is that all-time highs typically generate more all-time highs, right? So again, if you're up 1/10 of 1 point today, you're having a new all-time high. So everybody gets all excited about this. But new highs tend to get more all-time highs because of momentum. The MACD sell signal that was very close to triggering has reversed. We're back, have maintained, have not triggered a sell signal, back on a buy signal. Relative strength is starting to move up, not overbought yet, but is starting to move up towards overbought levels. So, again, it's, the market's got that momentum behind it, and money flows continue to be very positive here. So, just again, as I was saying a little bit earlier, is that, there's no reason to be overly bearish in the markets. But again, markets continue to kind of trend higher here, at least in the short term. Again, this long base of consolidation, this breakout is going to be potentially bullish here if it can maintain it. Now, if we just move up a little bit, then turn around and, by Friday or early next week, we sell off again to get back down to this range, well, then we're just back in that trading range. But if we can break out of this all-time high and maintain that breakout of all-time highs, that's going to certainly be bullish for the markets, at least, for the next couple of months. And now, importantly, we're still within the seasonally strong period of the year. So that's something to pay attention to. But again, you've had this very nice resistance level the market broke out of. You've had this rising trend line, and we talked about this compression of prices that would ultimately lead to a breakout one way or the other. So this kind of consolidation and this breakout is kind of that pressure you're looking for on the buy side to potentially lift this market higher, at least over the next few days, few weeks. Now, again, as we start to move further out on the curve, we've got other issues to deal with this summer. Markets are overbought. They're getting on a weekly basis. They're very overbought. They're very extended, top of trend channels. But on a short-term basis, the market technically is in a good position. So again, just continue to manage risk accordingly. Use these opportunities to rebalance portfolios. Again, if you were going through this period really stressing over positions in your portfolio, the market's giving you an opportunity to rebalance those, remove those losers, add to your winners, get your positions in a place to where you're comfortable with the risk that you're actually taking. But again, just overall, this kind of market move yesterday was very bullish, at least here short term, and at least through the end of the week. Just kind of keep watching on that. And if we can maintain that, then we have better outlook ahead over the next few weeks. So that's what you need to know before the bell this morning. We'll come back. We'll pick up with Danny Ratliff. Some big actions occurring right now with some big companies laying off employees. If that's happening to you or you're worried about it, we're going to talk a little bit about severance packages and what that means and how to handle that. We'll come back with Danny Ratliff right after the break and go through that with you. Don't go away. More coming up on The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. Danny Ratliff joining me. So, very interesting. We're starting to see I shouldn't say a pickup because there's already been a pickup in companies laying off employees. But just recently here in Houston, there's a couple of rather big kind of rounds of layoffs that occurred, a couple of big energy companies. And again, as the economy does slow down, and we're certainly seeing implications of this, going forward, there's certainly stress within the economy, high prices weighing on consumers. In fact, just yesterday, posted a couple of tweets on X. I don't even know how to say it. What do you post if you're not posting a tweet on Twitter? What are you posting on X? Are you posting X's on X? You're Xing on X? Okay, I'm not sure. Anyway, I posted a tweet on X yesterday that you're seeing the bank loan demand declining, as well as lending standards for credit cards continuing to tighten. So, the banks aren't as willing to extend credit. The demand for loans are declining, not surprisingly, with interest rates moving up a bit. So, again, but that's less, money is lent into existence. So if I can't borrow money, then I don't have money to spend in the economy. So, as that slows, it certainly weighs on economic growth. And if economic growth slows, of course, then companies have to reevaluate, how many employees they have versus the demand that they've got coming in the door, right? So it's all about, it was interesting in the chat, there was somebody asking about the Progressive commercial where they go, what's the economy? The economy is fairly simple. It's the supply and demand between producers and consumers. That's it. That's, producers produce stuff, consumers consume it. That creates economic activity. That is the economy. It's the transaction of goods and services within the confines of our borders, right? So that's the economy. And if that demand slows, then people are going to have to lay off employees. And we've got a lot of employees out there. We didn't overhire coming out of 2020. We put a lot of people back to work, and that was kind of one of the myths that we saw in a lot of the employment data. People say, President Biden created 44 million jobs or whatever the number was. The vast majority of those were just putting people back to work that got laid off because of the pandemic, right? So we didn't really overhire, but there is still, we've had enough hiring that if we get into a position of a much slower economy, we are going to see a tick up in layoffs. Unemployment rates will go up, jobless claims will go up. We'll see that. A lot of the job hiring we've had has come out of government work. And again, we're having a lot of discussions right now about reducing the size of government, reducing employment there. So all these lead to potential layoffs and unemployment. And so the question becomes, and the reason Danny's here this morning, is what happens if you get that pink slip? And kind of what are the first things that you need to kind of start thinking about if you think there's a potential you might lose your job, or you have lost your job? What are some of the first things you need to think about, some of the actions you need to take?
Yeah, I think, number one, if you think you may be losing your job in the future, there's just uncertainty, then ideally, start cutting back on expenses. Those non-essential items that you're spending money on, needs to be probably looked at a little bit differently. And so this is where you do see people begin to pull back if there's more and more, word of potential layoffs. And, sometimes that's that self-fulfilling prophecy, Lance, in a lot of ways, right? If, all of a sudden you start to see people slow down, somebody that has been laid off, you kind of self-evaluate real quick and, say, oh, shoot. All right, what happens if this happens to me? And so many times you begin to just naturally pull back. But so I think, number one, just make sure you understand what you have, what type of benefits that you have through your employer. What is portable? What can you take with you? Can you take your life insurance with you? That's one big thing that I think that I see people leave on the table quite a bit, is you may be paying for these additional benefits through your employment package. And once you're gone, most people just leave them. And that can be a big mistake because, for instance, if you have life insurance, it's a term policy. That group policy a lot of times is much cheaper than what you could get out on the open market. And you didn't have to go through medical evaluations. So something to make sure that okay, can I take this? Can I not? A lot of people don't like doing that before they're laid off, or even before they leave a job a lot of times, because they don't want to, hey, HR, here I am. I'm thinking about this. But something certainly to consider, disability insurance. Those are small little pieces. Now, another thing is, how many people have you visited with, Lance, said leave a 401k in one spot?
Tons.
Yeah, they may say,
they've got like 6 different 401ks all over the place. Yeah,
exactly. And so that can be, that may be fine, right? And it depends, because depending on your age, you may be able to do a, prior to 59 and a half withdrawal. So if you needed the funds, it may be advantageous for you to actually leave them in the 401k versus moving them to the IRA, depending on your age. So something that not all plans will allow for, but if you think you're going to need to access these funds to live on until you find your next job, I would certainly make sure you understand the nuances as far as, what do you have? Do you have other cash that you can access? Do you have funds that you can live on until you find your next gig? That's going to be key. So a lot of times we see, either we completely forget about it, don't understand how to use those funds if you can, or you completely forget about it and do nothing at all. So,
right.
I think that understanding, is a rollover a better option? Do you have a lot more flexibility in an IRA? Typically, yes. Not always the case, but most of the time you do. And so in a lot of times you have access to a lot more opportunities within an IRA versus a 401k. Another one would be, what does it look like if you have a pension plan? I know those are fairly extinct, but a lot of these companies, especially ones right now who are offering layoffs that we know of here locally, they do have these types of plans. Is it advantageous for you to move those funds now? Go ahead and do a lump sum rollover? If you're of retirement age, do you go ahead? Do you turn a pension on? What are the pros and cons associated with that? We talk to a lot of people who have these pension plans, and the biggest con for many people, I think that most people are probably more inclined to take that lump sum distribution. But know yourself, know what type of income you need within your financial plan. And essentially, you can back into some of these numbers. Now, that pension may be great to have, but here's the biggest con with it. Is, let's say you take a joint life survivor benefit from the pension plan. Well, if you get one paycheck from them and you die, you and your spouse, your beneficiaries don't get anything. And so that is a big reason I think that most people move on from looking at that type of option. You could look at, we've seen where rates with interest rates higher, we can actually go on a secondary market, find something similar from a benefit perspective. But on the back end of that, if something happens, that same example where you both pass And look, God forbid that happens, but we know it does. Yeah. And then your heirs would still have access to funds if there's funds still in the account. The idea too is that when we use any type of product like that, you want to make sure that you start it early enough. You understand the math of it is in the sense of how long can you go until these funds run out. And so essentially you want to make sure you take it at an age where you run out of your funds and then you're using their funds, right? And so I see mistakes made with that too sometimes, Lance, where people just delay, especially if it's like some type of deferred annuity somebody will purchase, and it ends up biting them in the rear because they didn't use it properly. It probably was too expensive of a product for them. And, many times we see that when stuff's sold and not planned for.
Right. Well, I guess, it really, too, and again, so we're talking about a couple of big companies here in town. It's like all of a sudden you get a pink notice. You weren't expecting it. And just all of a sudden there's a round of layoffs and, you're like, okay, well, what do I do now? I guess, and that's kind of the point you're making, which is, first of all, you should be aware of what your benefits are with your company ahead of time. But for most people, they don't. And so there's this big scramble right at the end. I just got laid off today. So now you're trying to figure out how, what you're going to do next. And now you're trying to have to go find and source out all this data. Go to Human Resources Department, get the data from them, understand your pension. It's a lot all at once, and a good financial advisor can certainly help you kind of walk through that, tell you where to go look, the things to go look for, the things to go ask for, because you may not even know.
Yeah, no, I find that a lot of times people don't, and so and it's tough, right? Most of us could not walk into your job and do your job, at least not do it well. So, that's one thing that I think that is a misunderstanding as far as what a good advisor should do is understand all the different caveats, understand your plan, what's the big picture look like. One thing, Lance, is health insurance. Yep. We see a lot of times that, COBRA is used incorrectly, or we rely on something like that, especially if we're over 65, right? If you're of Medicare age, you have a couple enrollment periods. And so you can essentially enroll when you're 65, which is your general enrollment period. You have 3 months prior to the month of your birthday, the month of, and 3 months after. So 7-month window. And then after that, you have a special enrollment period. If you're still working, let's say you're 67, you intend to work to 70, and you go ahead, you get a pink slip. Well, you have an 8-month window. And so where we see a lot of mistakes made, which can be very, very costly, is where somebody actually says, okay, you know what? I've got COBRA for 18 months or however long. I'm going to go ahead and just get on that. Then I'll get on Medicare. Well, if you're already over 65, you can take that 8-month window, but you need to make sure that you've dot your I's and crossed your T's, and you've actually signed up for Medicare, because if not, for every 12-month period, there's a 10% permanent penalty associated with it. And so that's a big one when we're talking about somebody who's over 65 continuing to think they're going to work. Make sure you understand that. Another thing we see, Lance, is that you're over 65, you quit, you've already bid, you go to Medicare. You have to, right? Mm-hmm. You do everything right, but then you get a new job and you get off Medicare, and then you get back on the company insurance. And we'll talk about that on the other side of the break, because that is a big problem, and I'll tell you why when we get back.
Okay. All right. Be right back. More of the Real Investment Show coming right up. Don't go away.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your question about Social Security benefits and what what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
You know, there's been lots of debates over shutting down the Department of Education, and that's really failed as a government agency to ensure that our children are getting a good education. Well, I have further proof it's probably a good idea that we try something different.
The Real Investment Show podcast.
I noticed this morning as I was getting ready for work, I looked at the milk carton and it said expiration date, February the 30th.
Same show, your schedule.
Just curious who was putting the expiration dates on the milk.
At realinvestmentadvice.com.
Apparently I have milk that either never expires.
It's the gift that keeps on giving.
Yeah.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, welcome back to the show this morning. So just talking a little bit about, we're seeing some layoffs here locally in Houston, but also this is happening nationwide. Just talking a little bit about just kind of things to look at if it happens to you. Hopefully it doesn't. We don't want anybody getting laid off. That's never a fun thing. But as the old saying goes, a recession is, when your neighbor gets laid off. A depression's when you get laid off. So we're not there yet, but again, just something to kind of pay attention to because we're getting a lot of questions on this because it is happening, and we're starting to see a few more people getting laid off than before. And so this is probably, if this continues, we'll start to see this show up in some of the unemployment numbers as well. But and by the way, I owe Larry an apology. I referred to him as somebody in the chat. So if you're on our YouTube channel, he's the one that made the comment about the economy. So Larry, apologize. But be sure and like and subscribe to the YouTube channel. We certainly appreciate that. So Danny, you were just finishing up on kind of where we were.
Well, there's a lot of moving parts when we look at these plans, and it's going to be different for each and every person. So, finding somebody that can be your advocate and look at these with you side by side and just kind of look over your shoulder and say, hey, have we thought about this? Or are we leaving any money on the table? Are there benefits that you should be looking at differently? And even while you're in open enrollment period, even if you're not getting laid off, I think this is something that's important to do. But we were just talking before the break about if you're over 65, all the different time frames that we need to think about insurance. One of the bigger mistakes that we see made is where somebody goes in and they say, look, I'm going to go ahead and take COBRA, but I'm over 65. They don't take Medicare in time. But we also see it work the other way where somebody does sign up for Medicare, they lose their job, they're over 65, they sign up, then they go and they're reemployed, and they get back onto the company health insurance plan. And that's a big mistake because there is one time that you have of guaranteed insurability, meaning that you're not going to have to go through a medical evaluation. They're not going to be able to jack the prices up for you, or deny you altogether. So make sure that you have a very good understanding as far as what you're doing, and don't jump from one to the other and back if it's going to be, it can be to your detriment. And so, these are why we bring these things up right now. As Lance mentioned, there's been a lot of layoffs that are occurring right now. We've seen some here in Houston, some of the larger oil and gas, Chevron, some other companies. Happy to visit. If you guys have any questions, don't hesitate to reach out. We'd love to visit with you. But, this is something that unfortunately it seems like we may be seeing more of.
Well, kind of another aspect of that also is just understanding not just the benefits, but also understanding, stock option plans. ExxonMobil or Chevron or these, they have, big stock option plans. And then you need to understand net unrealized appreciation, what to do with the stock, those type of things as well.
So that's a great point, Lance, where you may not want to make any big moves until you actually look at that. So what Lance is referring to with NUA or net unrealized appreciation is there's a favorable tax treatment you can do. So say you own company stock inside of your IRA, you can actually go out and pay ordinary income on your cost basis if your cost basis is really low, right? We want to go in and we run an analysis to make sure and determine, okay, where is that break-even benefit where it's the most advantageous to you? And so from there, you can move those funds to a non-retirement account outside of that 401k. Now, it all has to be done in a 1-year time frame, really technically at one time. So you move those funds to a brokerage account, pay the taxes, which you may be able to do with proceeds in the account already. And then from there, anything that you sell is going to be long-term capital gains. So there's some strategies to keep more money in your pocket. I know we talk about that a lot with the financial planning side. That is a great tool. We do see that more with oil and gas companies. So something that you should be looking at. So don't just go and do one broad swoop layover or sell everything you have in the account if you have some company stock at very, very low prices. So keep that in mind. If your cost basis is low, talk to somebody first.
Right.
But that's right. Stock plans, how does it vest? What works best? How you should be utilizing that? I think that's an important part of the equation as well. We do see a lot of that here in town, and really we've got clients all over. I mean, we've got a lot of people we've never actually shaken their hands, which is, I always find it interesting, and it's really neat because you get to see different perspectives from all across the country. COVID has changed a lot. I mean, we worked like that a lot with people before, but that's changed the game quite a bit. But yeah, so don't hesitate to reach out, RIA. So go to realinvestmentadvice.com, RIAadvisors.com. Happy to visit. Go to schedule an appointment. We'll get you set up with somebody that knows your company and that can help you walk through that.
Yeah, because there's just a lot of little things that, unfortunately you find out later. It's like, oh, I shouldn't have done that.
Yeah.
Right? Then,
well, I think it's better to, put a plan in place before you make any just rash moves. We see something sometimes, like I mentioned a bit ago, if somebody's like, I got fired, screw you, I'm taking everything right now. It's like, whoa, hang on, pump the brakes. It's
you do a lot of emotional
of
actions.
Course.
Yeah.
Well, I get it, right? You just lost your livelihood in some ways, and it's personal. So you want to make sure that you get all that you can out of there. But yeah, that's a big part of it, and it's just having somebody there that can be your advocate, and then understanding where to go from there.
Right. So let's switch gears here a little bit. Social Security's been all over the news lately because of DOGE and Elon Musk, et cetera. And, a lot of it's interesting. There was a lot of a debate over the last couple of days in particular because basically he kind of pulled the database from Social Security and found people on the database that were like over 350 years old. And of course, that's older than even the country. Social Security was started in 1935. So that was when we started issuing Social Security numbers and all this other stuff. So, it's interesting because now there's a lot of questions. Okay, well, out of all these people in the Social Security database, there's more Social Security numbers than there are population. But that makes sense because people have died, right? So those Social Security numbers are still there. Question or not is, are they still active, and are there people still getting benefits? And of course, kind of the immediate is like, oh, well, nobody would ever commit fraud on Social Security, by claiming benefits that they weren't really entitled to. the question is that happening, right? There's, because you and I have talked a lot in the past about, the problems with Social Security in the next, 5-10 years. We're talking about, Social Security's, the Social Security Administration has said, hey, basically our programs are pretty much bankrupt and we're going to have to cut benefits. But if you could find, if there's, just say out of 300 million people that are in this database, pick a number, 10 million, 20 million of them might be, quote unquote, fraudulent recipients. They're just claiming benefits. Somebody died in the family and they just never filed a death certificate with Social Security, et cetera, still collecting checks. We know these things occur in the past because there's been people convicted of this. But if there's 10 or 20 million of these people that are collecting benefits, you take that off the rolls, all of a sudden, you're saving, $25, $30 billion a month in Social Security payments just by cleaning up some of the fraud, which would go a long way. $30 billion a month, 12 months.
It's a lot of money.
That's a lot of money that could help, solve some of the deficiencies in Social Security. So it's a big debate that's going on right now. And then, of course, the other side of this is talking about whether or not you should tax Social Security benefits or not. One of the platforms under Trump is no taxes on Social Security because a lot of people are still working in retirement.
That's right. It's funny going back to one of those first points you made. I think I saw somewhere, and don't quote me, but there was like 390 million people
in Social Security database
receiving Social Security, right? Or was it just in the database?
No, that's just the database of Social Security recipient.
Well, that makes sense.
Sorry. That's the number of Social Security numbers in the database.
Yeah, okay. That makes sense. But, it's interesting when the head of Social Security quits when you say, hey, we just want to audit the books. Yeah. And that's what's frustrating, right? I mean, this is your money. So you got to understand, I hear both sides of the aisle on this one. And, people are upset or people are really happy. At the end of the day, if you own a business, you audit your business, you audit your financials. That's what is happening here, which has not been done for decades, unfortunately. And so this is your money. This is your tax dollars. It's not their money. And I think that's where the frustrating part comes in, especially if you have to write a tax check here coming up here shortly, if you haven't already done so. But, going back to your point, right now Social Security can go till 2034 with no reduction in benefits. At that point, there is a 20% reduction in benefits for people who are on Social Security now or people who will be getting onto it. So something needs to be done. There's actually been a lot of different reforms that have been put out there, some bills that just really haven't gone anywhere. Thomas Massey has a new bill out right now that they're looking to try to, at the moment, and the public loves this, of course, and, Congress loves this, which, is interesting because this actually makes the problem worse down the road. And so right now, Social Security benefits are taxable. So 50% of your benefits, if you're married filing jointly between $32,000 and $44,000, 50% of those benefits are going to be taxable. If you make over $44,000, 85% of it is taxable. If you're an individual filer, all you need to do is make $25,000 to pay 50% benefits. 50% taxes on, or 50% of your benefits be taxable, excuse me. So, this actually, there's been studies done. This would put about $3,000 back in people's pockets. Now, those numbers sound extremely low, right?
Right.
Everything we do, we get a cost of living adjustment. They make changes. Heck, on your Medicare premiums, they give you that increase. But guess what? They don't do that. There's not been major Social Security reform since 1984, and those numbers have not budged. If those numbers had budged, we'd be over, $78,000, $80,000 is where they'd actually start taxing that. And that could be another way that they look at it is say, okay, let's do what has inflation been since, the last 39 years. Mm-hmm. And that's what the number should be now for what we're actually going to tax. And that would not be as big of a drain on Social Security because you would still have people paying in, paying taxes on it. But I get it. You've already paid taxes. You're going to pay taxes.
That's kind of my point, right? But I've been paying Social Security taxes my whole life. I'm 60, right? Been paying Social Security taxes my whole life, and then if I want to earn a little extra money in retirement, you're going to tax me on the benefits that I've worked 65 years to get. Well,
you can earn extra money.
Just not more than $25,000.
No.
Without getting taxed.
Without getting taxed on your benefits.
That's what I'm saying.
You can have benefits withheld if you make too much money in your pre-full retirement age. So that's a different topic.
Since you won't let me retire, basically
you're not even worried about it. Yeah.
I'm not ever going to get my Social Security benefits.
Yeah, you're going to get them. I mean, you have to take them at 70. So, you got at least 10 years.
And then you tax me.
Well, yeah. But who knows where it'll be in 10 years?
It's going to be broke.
Nah.
All right. We'll be right back after the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your question about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So today's earnings announcements are making me hungry.
Yeah.
Yeah. We have Cheesecake Factory, followed by Wingstop and Toast. So I've got a craving for toast and wings right now and
Toast
some cheesecake.
and wings.
Toast, wings, and cheesecake. So I'm not sure.
Now, no avocado toast?
Yeah.
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 Can you still afford it?
No.
Just
Well,
no-
actually, I
no
can't.
eggs?
I eat the avocado and the toast, just no eggs.
No eggs?
Yeah. Can't afford the eggs. But you know what's interesting is that I generally buy egg whites, which have not gone up that much in price. So
Wonder why.
it's all artificial.
Yeah,
just
because it's not
chemicals.
real. You're buying it. You're buying it. What? It comes in that little milk carton.
Yeah.
Yeah.
So
Uh-huh.
it's not real.
Can be. I think the benefits. You need to start doing some research here, Lance. I think the benefits of the yolk will surprise you.
Oh no. I know that.
Yeah. What diet are you on right now?
Don't eat anything and work out like a fiend. So
Yeah?
pretty much.
How's that working out?
It's working out great.
Yeah, you
I've
sure?
lost 4 more pounds, so I'm down.
Oh, I don't know, Lance. Only 4? That's it?
I didn't have that much to lose to start with.
I don't know. I'm kidding. I'm going to give him a complex. That's my plan here.
Yeah, exactly. Now,
4
back to the
pounds? You mean
gym.
you gained 4 pounds? What's going on? This shirt looks a little tight. Do you shrink it?
Getting ready to go skiing, man. I gotta cut it off.
Oh man.
Anyway,
so talking about Social Security, you did mention something. So there's a couple things that we're looking at, right? So what we were addressing and talking about, new legislation's out to actually potentially do away with taxes on your Social Security benefits. So what Lance had just mentioned, and I think this is great, right? We want more money in people's pocket, but there needs to be other sides to this reform. And it may be raising the income caps or getting rid of them, where at a certain point, it's like right now you can make up to just over $176,000. And at that point, you get a little bit of a pay raise. You're not paying that 6.2% additional Social Security taxation. Anything over that. But what Lance is mentioning, and if we do get rid of this, where Social Security benefits are taxed, that actually takes you from 2034 to 2031 before you get that 20% cut. So they need to find other ways within this reform to make sure that it remains solvent. Now, maybe it's just there's so much fraud out there that they come back and say, hey, all right, you know what? We're much better off than we thought.
Mm-hmm.
You kind of hope that's not the case. Maybe you kind of hope it's the case too, because there's a whole lot more solvency to it, and the program is much better off than what we've been told, right? And so CBO puts out reports each and every year, which makes you wonder how deep of a dive did they actually do, right? So Congressional Budget Office puts out a report on the Social Security and Medicare Trust each and every year, and that is what's kind of alarming to me. Is like, oh shoot.
Well, they're looking at their numbers. They go, look, we have this many people with Social Security numbers. We have this many people claiming benefits, right? And that's what it is. But what they don't do is go verify
the deep dive.
Right. Like,
Yeah.
How many of these are actual, claimants, right? Are there people coming in from other countries filing Social Security numbers, collecting Social Security benefits? We suspect that there was, money being funneled through Social Security to illegal immigrants that were in the country. I mean, there's a lot of this, concern out there, right?
Yeah.
About potential fraud within the benefit structure. So if you could just, go through and say, look, and one thing this kind of table that DOGE pulled with just all the Social Security numbers are, say, okay, well, if you've got people over 100 years of age that have a Social Security number, go verify them. Say, look, if you need to verify, we have to verify everything, right? These days, it's like, hey, I want to log into my bank. Please verify your identity, 12 times, right? So just verify that these people that are, and again, all you got to do is now take that Social Security number. Say you got a Social Security number for somebody that's over the age of 100. Go to Social Security Administration. Is that Social Security number receiving benefits? If that Social Security number is receiving benefits, verify that person's still alive. And now, but again, that takes work, right? But you could clean up a lot of this very, relatively simply just by doing an actual audit of who's receiving benefits at older ages.
Maybe those 87,000 people they hired for the IRS should be put to work in
Could be
monitoring their own books.
Yeah.
Yeah. But so what you were alluding to earlier was essentially if you were working, you took Social Security benefits early, say it's 62,
right,
and you're still working,
right,
you can null and void the income from Social Security that you would receive. Now you would get a discount and you'd get money back later at the tail end when you do get benefits at full retirement age. But essentially, if you make more than $23,400, that every $2 above that, you're going to have $1 in benefits withheld. So I have actually seen people who've gotten a deferred compensation, who didn't think anything, just made an emotional decision, did not need to take it, actually get a reduction in benefits and have to pay all that money back at the very end of the year. And they didn't even go back to work. That was just a deferred comp that they had coming in. Now, if you went back to work, those numbers are still relevant. And so that is where it's, we typically will advise to wait till full retirement age at minimum. For most people now, it's 67. So if you were born between 55 and 60 or 59, they added 2 months for each year to increase that benefit of full retirement age until 67. So we ideally want to wait. Now, you may need to take it earlier, right? You've got a health condition. You've been laid off. You just absolutely need the funds. But if you can defer, especially if you're married and you've been the breadwinner, you'd like to defer because your spouse will get a step up in benefits, plus they get half of your benefit at full retirement age. Now, every year from full retirement age until 70, you get an 8% bump, and not everybody can wait. Maybe it's not in the plan. It doesn't work right. But if you can, that can be beneficial, especially if you're in good health, you have longevity, and you think about it, if you are married, this has to be a decision that's based on both of your lifespans. So a lot of moving parts with it. And another reason, we talk about, why we have to do deep dives within plans, because you have to understand how all of these different things work and how they work together.
Yep. And it's interesting right now because there's a lot of people, really kind of pushing back on DOGE and this whole transparency thing. It's like, oh, they don't have the right to the access to the data, and which I find interesting, right? Because we don't want DOGE to have access to the Social Security data, but yeah, you've got to give your Social Security number for everything.
Yeah,
right? Just like you want to get a driver's license, Social Security number, whatever. You've got to use Social Security number. I thought this was interesting. This was a memorandum from the White House My administration is committed to creating an unprecedented level of openness in government. We will work together to ensure the public trust and establish a system of transparency, public participation, and collaboration. Openness will strengthen our democracy and promote efficiency and effectiveness in government. Government should be transparent. Transparency promotes accountability and provides information for citizens about what their government is doing. Information maintained by the federal government is a national asset. My administration will take the appropriate action consistent with law and policy to disclose information rapidly in forms that the public can readily find and use. The memorandum goes on, but basically it's just talking about the need for transparency. And I just find it interesting that, because of what's happening right now and what's happened over the last, few years, there's such a fight about having transparency over where taxpayer dollars are being spent. And again, we talk about the issues with Social Security and all these other things. Oh, and by the way, that was Barack Obama in 2009 that wrote that memorandum.
Oh, wait, what?
Yeah. So he was a big promoter. That was his main platform, was about government transparency.
Yeah.
It never occurred, but again, it's this is something that Americans do want, and something that Americans should have the right to know is where their tax dollars are getting spent. And if we can clean up just some of this stuff, and just go through and clean up roles, et cetera. Just make sure that the right people are getting the benefit. Look, we want, the goal is to, we have these benefits for a reason, to help people. We just want to make sure that the right people are receiving them. We clean this up. It could solve a lot of these problems, like with Social Security, like Medicare, like Medicaid, which are, do have funding problems that a lot of retirees. I ran a report yesterday. There was a chart out showing that that 401k participation has now reached 50% of employees. So 50% of employees are participating in 401k plans, which is great, until you realize that only 50%, roughly about 50% of businesses actually have access to a 401k plan, which means that really you only have 25% of working Americans contributing to a 401k plan. But out of that number, only 65% actually contribute to the plan, even if they have access to one. Right? So now you're talking about roughly 17.8% of people that have access to a plan are actually contributing to a plan in total, which means that there's a lot of people that are going to be dependent on Social Security when they reach retirement for a very large chunk of their retirement income. And we need to make sure it's going to be there.
Well, the problem is Social Security, if you go back and look at the numbers, over 60% of people taking Social Security right now rely on it for more than 50% of their retirement income. You have a quarter that rely on it for 90%. When Social Security was made, it was designed to subsidize, not to actually be the majority of people's retirement. And unfortunately, we've been in an environment where, number one, I think it starts with education. We don't educate well enough. There's no financial 101. Kids don't even know how to write a check. Not that they have to this day and age, but balancing a checkbook, I think that they've gotten so far away from just the basics. Mm-hmm. And it's intentional, right? Because why? Don't worry about it. Put it on a credit card. How many people actually, that I bet that are younger, actually go through their credit card statement, go through all their expenses and the income they have coming in, and actually run kind of a ledger, right? That doesn't happen anymore. It doesn't occur. But going back to your point, if you just do a simple Google and go look up retirement savings by age, it'll scare you to death.
It's dismal.
It is terrible. And
which goes back to, why are you taxing people on their income in retirement? There's not enough in Social Security checks to cover their living expenses. They got to work.
Well, and that's the frustrating part, especially now when you find out what they've actually been spending your money on.
Yeah.
That is extremely frustrating. And so, hopefully something is done. I don't know if you heard about the DOGE dividend.
Yep.
Yeah. What do you think?
Terrible idea.
I agree.
You want another spout of inflation? Send checks to households.
Well, keep the money.
Give them a tax credit.
Do something good with it. Shore up your programs.
Right. Or just provide a tax credit.
Yeah.
There you go. All right. Wrap up the show for today. Be back tomorrow with Michael Leibowitz. Catch up on all things Fed, economics, interest rates, bonds. That's tomorrow with Michael Leibowitz. Article on the website from yesterday as well. Mike's new article out also on the website right now, realinvestmentadvice.com. Have a great day.